When it comes to gold producers, it would seem that few are as on the nose as Kinross when it comes to knowing the capability of their operations. The gold major this week put out their fourth quarter earnings, and well, it would arguably be difficult to be more accurate on guidance than Kinross was in 2024. Folks, let's dive in. Now, normally we start out these videos talking about net earnings or revenue or whatever, but we're going to change it up a bit here today, and that's because Kinross did a remarkable job when it comes to their guidance. I mean, look at this. Production guidance of 2.1 million ounces. And what they produce in 2024, 2.13 million ounces. Attributable production cost of sales guidance of $1,020 an ounce, which came in at $1,021 an ounce. Attributable all-in sustaining cost guidance of $1,360 an ounce. Granted, they were a small 2% off here, with the figure coming in at $1,388 an ounce, but their guidance is a plus or minus 5%, so it's still within range. And capital expenditure guidance of $1.05 billion, where they finished the year at $1.051 billion. Given the multitude of things that are capable of going wrong in any given year, from equipment breakdowns to geological models being off to geopolitical issues, I mean, they operate across 4 countries. There's plenty of opportunity for error there, not to mention the rising cost of gold impacting royalty rates and everything hitting their cost structures. And no, they didn't change guidance midway through the year. We checked. It was issued in February of 2024. Anyways, while we're here, we might as well cover the outlook. We already screwed up the normal flow of this video, so why not, right? For 2025, Kinross is guiding to gold production of 2 million ounces, which is a slight decline from 2024's numbers. But this production rate is expected to remain flat now through to 2027. Attributable production cost of sales is expected to rise to $1,120 an ounce, while all-in sustaining costs are expected to hit $1,500 an ounce. Attributable capital expenditures are pegged at $1.15 billion, and like last year, these numbers are said to have a variance of plus minus 5%. All right, now back to our regularly scheduled programming. Kinross in the fourth quarter recorded metal sales of $1.42 billion, a jump from the $1.12 billion recorded in the fourth quarter of 2023. A total of 518,000 ounces were sold in the quarter, a decline of 8% on a year-over-year basis. The average realized gold price on a per-ounce basis, however, rose by just under 35%, going from $1,974 an ounce to $2,663 an ounce, which more than canceled out the decline in ounces sold. Production, cost of sales, and depreciation both rose on a year-over-year basis. However, that massive boost in the price of gold led to operating earnings jumping by 159%, which moved from $194 million to $501 million. Net earnings in the fourth quarter improved an even larger 321%, improving to $276 million or 22 cents a share in the fourth quarter of 2024, up from $65.4 million or 6 cents per share in the year-ago period. Adjusted net earnings improved less dramatically, moving from $140 million or 11 cents per share last year to $240 million or 20 cents per share this year. Free cash flow overall improved from $117 million to $434 in the fourth quarter. For the full fiscal year, metal sales totaled $5.15 billion in 2024, a 21% improvement year over year from the $4.24 billion in 2023. This was off the back of the sale of 2.11 million ounces versus 2.18 million ounces last year, with the average realized gold price rising from $1,945 to $2,393 an ounce. Operating earnings improved substantially, moving from $801 million to $1.54 billion, a 92% increase, while net earnings more than doubled from $416 million or 34 cents a share in 2023 to $949 million or 77 cents a share in 2024. On an adjusted basis, net earnings rose from $540 million or 44 cents a share to $838 million or 68 cents a share. Attributable free cash flow also saw a large year-over-year gain, climbing from $560 million to $1.34 billion. That cash flow was put to good use, with Kinross in the fourth quarter making a $250 million payment on its term loan, bringing total debt repayment in 2024 to $800 million. Post-quarter end, a final $200 million payment was made on that debt, resulting in the term loan being repaid. As of December 31st, Kinross had cash and equivalents of $611 million, along with available credit of $1.65 billion and total liquidity of $2.3 billion. And even with the debt repayments, the company has declared a 3-cent per share dividend for the fourth quarter and has indicated that they will be instituting a share buyback program later this year. Okay, let's briefly touch on the assets. In terms of operational mines, Kinross actually didn't have a whole lot to say. Yes, they went on a mine-by-mine basis and stated briefly whether production was up or down versus the prior year, but there wasn't a whole lot of detail, and quite frankly, it's not that interesting. If you want to know the minutiae, you probably already read the company news release anyways. So let's skip to the development assets, because how can we have a Kinross video without at least addressing Great Bear? Kinross has 3 development projects, of which the premier up-and-coming project is, of course, Great Bear, and it appears to be advancing well under what Kinross calls the AEX, or Advanced Exploration Program, alongside permitting for the main project. Early works under AEX, which includes tree clearing and earthworks, have begun on site. Some permits are in hand already, but 2 more are needed for the completion of the current program, but those permits are expected to be received later this year, at which time development of the exploration decline will begin. Detailed engineering and procurement are ongoing for this portion of the project. For the main project at Great Bear, detailing engineering and execution planning is the current focus, with the selection of design partners underway. An impact statement is expected to be filed with the Impact Assessment Agency of Canada later this year. Exploration has also shifted from deep underground resource drilling to regional work, focusing on identifying new open pit and underground deposits at the property. Elsewhere, Kinross has made the decision to mine the Redbird pit at the Bald Mountain Mine, which has a current resource of 1 million gold ounces. Phase 1 of the pit has been approved, which will produce 175,000 ounces of gold and extend the mine life of Bald Mountain to 2028. A second phase could extend the life of mine further to 2031. Finally, baseline studies are being conducted at the Lobo Marte project to support an environmental impact assessment for what could be a potential low-cost large mine. Now, despite our review of the earnings, it appears that some investors in Kinross disagreed with our sentiment. The equity is currently trading down over 7% on the results because gold investors love to get beat up. The issue appears to be analyst estimates, which I called for earnings of 25 cents per share versus the 22 cents recorded in Q4, because apparently an over 300% gain year over year isn't enough for some investors. CEO.ca user Can't Stand Cash seemed to summarize things nicely here, saying short-sighted people selling on news and taking profits on technicals after a decent run. Don't Mind Me seems to think they just needed to mention AI if they wanted some market love. Well, Bougie Boy seems to believe that it might be related to guidance provided, which is calling for a slight downtick in production levels for 2025. Over on Twitter, Alan referred to the results as a total disaster, while later blaming his commentary on an increase in ASIC and a slight decline in production year over year. The mining bartender, meanwhile, credited the decline simply on the toots and hedgies hating miners. All right, so let's wrap it up. Despite what the market is saying, from our vantage point, it was a great quarter for Kinross and a strong close to 2024. Sometimes you can't please the market no matter what you do. Looking to 2025, the current gold environment is sure to benefit the margins of Kinross and, quite frankly, any gold miner. So we suspect the numbers will only get better from here, even if production is a little lower. All right, guys, we are just kicking off Q4 earnings season. We're going to be bringing the smoke for you guys over the next couple of weeks. Seems like people on our channel like mining. That seems to be our niche. So we're going to be covering a lot of the big mining companies. If there's names that you do want us to cover, however, please let us know in the comment section, because our job here and what we want to do is deliver for you guys, the retail investor who wants to know more about how these companies are performing. All right, everybody. Thanks for watching. And as always, if you enjoyed this video, please smash that like button. And we love every share we get on social media. It goes a long way with the algorithm. Thanks for watching, everybody.